Cool. All right, I'm going to get started. It is 9:30. I know we had 82 people that RSVP'd, so there's only 37 right now. So some people might be a little late. But I'm going to start the intro. So thank you everyone for coming. I know the time zone, my time zone is super weird for a lot of you probably. So appreciate you joining. I'm super excited about this Zoom call. I think the purpose for me and what I wanted to, I was talking to my wife the other day, trying to figure out what exactly I want to talk to you guys about. And I really wanted to kind of add on to what Marcus talked about, I believe it was last week, because he did a great job of kind of going through the basic SMC type terminology language that we're going to be using that you guys, for some people that are new maybe to the group, aren't familiar with, like chalk, for instance, POI, mitigation, imbalance, all these words. He did a wonderful job talking about that stuff. So if you haven't seen his presentation or his PDF, guys, definitely go look at that. It's really well done. He's a better designer than I am. So kudos to him. So what I kind of wanted to do though is kind of add on to that. And it's going to be a bit more in depth from a kind of technical view. That's how my mind works. I like to try to understand the why of the market so that when I start taking these OB trades, there's a reason behind them, not just randomly taking them. So we're going to go through a bunch of different topics today. So I'm just going to move to the next slide that is going to cover that. So we're going to be going through market timing for the best moves. We're going to be talking about the different phases of the market. And if you can start to learn how to pinpoint where you are in the phases, I think it will really help you guys understand from a POI perspective where to take your trades, when not to enter trades, depending on, again, your strategy. All right. I'm not going to be talking about how to create a strategy today. There's going to be so much information here, guys, on how I can show you to take better entries, how to get confluences for your entries, especially with these alerts that come out from Ann. And then it's up to you guys, depending on your lifestyle, depending on all the things that you have going on, your job and different things, figuring out what works for you. And we're going to be talking a bit about that at the end and the importance of a trading plan and back testing. We're going to be dissecting OBs on the lower timeframes. This is going to be really important for you guys to understand how to do, because I believe firmly that if you guys can learn this and you guys can understand what these patterns are and why price is doing what it's doing, your win rate will skyrocket. It will just be way better because now you have an added confluence of the why of why am I taking this trade? Did it even make sense, etc. We're definitely going to be going through some trade examples, you guys, because I want to show you guys that in real alerts that Ann sent out last week. We're going to be talking about what OBs to take depending on your strategy. And we're going to talk a bit about psychology and then obviously the trading plan and back testing. So super pumped about this. I think it will give you guys a lot of value. And if anything, it's going to probably even spur other questions that will create even better content in the future. So let's dive in. So first topic is going to be market session timing. I don't know, there's probably a few people in this group that is familiar with like an ICT, the trader, and talking about how the market moves from an actual market session perspective. And we're going to talk about not just the sessions, so Asian, London, and New York. We're going to be talking about the specific timings of the market and how they can relate potentially to your guys' trading plans, as well as maybe answer some questions on, like, you know, for certain people, depending on your time zone, maybe you get to trade Asian more than others because of time zone, and you're confused at why you don't maybe get the volatility you're expecting, or how you can leverage London's open and New York's open to actually get really powerful moves that you can get your 1 to 5, 1 to 10 plus RR in minutes or in an hour versus waiting all day. Okay, so we're going to go into a bit about this and why if you break down these zones, why these kill zones kind of map to the overlap of two markets, right? So when you have like the Frankfurt Open or the end of the Asian, you have the overlapping time frame. You've got your London overlap with New York, and why there's more volatility and why you can expect better moves during those times. So when we're talking about kill zones, now kill zones in ICT, terminology. You don't have to call it a kill zone. That's just what he calls it. These are always represented in New York time, you guys. So when you set up these things, there's tons of indicators on TradingView or whatever. If you guys just look up ICT kill zones, there's hundreds of them. And what you need to learn and understand is that you need to make sure that you set your TradingView time zone to New York so that you can set up the indicator properly based on this chart that I'm showing you here. So London kill zone is 2 a.m. New York time to 5 a.m. New York time. New York kill zone is 7 a.m. to 9 a.m. New York time. Asian kill zone is 8 p.m. to 12 a.m. So once you have your chart set up, then you can flip back to your time zone and the indicator will properly map to these areas. Okay. Now, when we're talking about pairs, you guys, Ann sends out all the alerts for basically every single pair and indice, etc. It's important for you guys to learn that there's certain pairs that will move best during certain times. Now, a lot of the major pairs or major crosses will move regardless during the London and New York, just because of volatility. But there's obviously best pairs, for instance, to trade if you're in Asian session timing, and I've kind of outlined them here. Now, it is advantageous to use a strong currency against a weak currency pair during Asian, because then what you'll end up getting is you'll getting a bit more moves out of the Asian session. Now, I've told people in the past that it would be advantageous to not trade the Asian session if you can avoid it, but there is ways to do it if you understand the average ADR, so the average move range of these sessions, okay? So let's just take a look at some chart examples of the London kill zone. Okay, so this is GBP USD. All right. Now the kill zone, you guys, is the blue little boxes you see. So this is a time indicator on, sorry, the blue boxes are not an indicator, but it's a little feature you can do in TradingView where you can actually click one end to the other and you can check the time. And what I'm basically showing you guys here is that the yellow areas that are highlighted is the London session, and the kill zone times are between the blue areas, okay? Now, I'm pretty certain if you understand and can see, there's a pretty strong correlation of a pattern between the volatility of that time and where price actually moved off an order block in relation to that time. And so the average pip range for a London session, depending on the pair, you guys can look these up. So GBP USD is around 60 to 70 to 80 pips in that move, okay? So with that knowledge, you could understand that, you know, depending on your strategy, 5 minute, 1 minute, etc., if your stop loss is, you know, 2 pips and you get 10, 20 pips, well, then you have a good range of potentially hitting a 1 to 10 during that, or yeah, 1 to 10 during that session. But if your stop loss is 10 pips and the session range is 60 pips, then you're probably not going to get a 1 to 10. You're going to have to understand that the range in which you're trading will only give you typically a certain amount. Now, depending on going with trend, we're going to talk about this later. If you're with trend, then you can definitely hold over the session periods. But I hope this starts to make sense now, and maybe an aha moment of understanding the movement of the time zones in relation to where you might be looking for your trades. So if we go to the New York kill zone, you can see here, after the London session, typically you'll get a retest of the London move. If the London had a breakout, typically New York will kind of slowly fall towards an order block and then either keep going. Some people have asked the question, and I don't have time to do it in this video, but, you know, is there a correlation between London and New York and how the daily range is? And there absolutely is. Typically, and this is where you have to back test and you have to understand kind of the daily range, but typically London will set up the daily high or low, which means you can expect an order block pullback inside of New York range. So you have to play with these things, and I'm not going to go too in depth on that, but you can see here clearly, guys, that the London kill zone GBP USD, where it starts and how well it actually moved. You can see there's a couple, I think there's one day here in the middle that, you know, ranged a bit, and that can happen, but you still had an average pip range there of 30 pips. So sorry, it actually says on the chart 43 pips. So that's a big move for someone like myself who trades the 1 minute, and even people trading the 5 minute. That can give you a solid trade for the day. Okay. Now, this is where it gets interesting from the Asian session perspective. Okay, the average Asian session, now this is GBP CHF, again you're talking about a major pair versus a minor pair. You can see here clearly that you get between 50 to 30 pips. Some days are, one day was 41 and 42, but the other days were 26, 24, 28, and 29. So you need to understand, if you are trading the Asian session, where your TPs might be. And we're going to get a bit into this later, because it's important to think, you can't as a trader just think every trade's going to go to the moon, right? So it's very important to start to understand and frame your trades from a POI supply demand perspective. And we're going to get a bit more into that. So that's the overview of the timing. Okay. And I'm pretty sure if we go back to these, and again, obviously this is going to be recorded, you guys can watch this over and over, but if you back test this in your charts, you're going to see a correlation of volatility in these certain specific times that you can probably coordinate OBs with. If, let's say, and I'm going to talk about this in the back testing at the very end, is that ideally, and Ann mentioned this yesterday, you should not be taking every single alert. That's just too much. You should be focused on a certain amount of pairs, or pairs that work with your trading plan. And then you can actually start deriving potentially trades for the day, because maybe Ann didn't get, there was no alert for that pair during the time you were awake, but there's absolutely probably still a trade if you start to dissect these things. Okay. So the market phases, guys, this is the next part of it, is understanding kind of where you are in the market. Okay. And I'm sure there's some people in this group that have heard this topic before, but there's 4 phases to the market, 4 cycles, if you will. You have your consolidation or accumulation phase, you have your expansion phase, you have your distribution phase, and then you have kind of your decline, which is the inverse of everything we just talked about. Now, there is a couple of other phases in there that some people talk about, reaccumulation, etc., as price is breaking out in the expansion phase, and that's fine. But the expansion phase in general is one leg of structure. Anne has kind of mentioned this in the past with the ABCD strategy, where you're always going to have these phases that start to break out, pull back. The C leg is bigger than the B leg, etc. So understanding where you are in the markets is important for your overall market view, and where you can take your trade, and even potentially where your TPs are, because if you're with trend or you're not with trend, then that is completely different from a strategy perspective. Okay, so this is an example on a 4-hour chart of the market phases. You have your consolidation phase, typically happens after an expansion or distribution phase. Now, distribution is it looks very similar to accumulation. However, you get a little more liquidity sweeps in distribution. And what these areas are, you guys, and they're formulated typically off bigger moves. So this 4-hour chart talking about accumulation or consolidation typically would have happened after, say, a weekly demand got hit, just like we were in with Euro USD for the last 2 months. We've been in more of a consolidation complex pullback phase because we hit a weekly demand. So with that knowledge, we could say, okay, well, the market does not just like fall off a weekly and smash into a demand and revert instantly. That's not how the markets do work. It has to reaccumulate. It has to distribute those orders and figure out its equilibrium again. And this is now, with that knowledge, you can start to empower yourself to understand, okay, well, we might be coming into a daily OB, and a daily OB might have a 4-hour consolidation period, or even less. It might even have a 1-hour consolidation period, in which case maybe your strategy says, okay, cool, I'm gonna work on trading from the edges, and we're going to talk a bit about that. Whereas if I'm in an expansion phase, then great, we can start taking these OB pullbacks and we can trade with trend back up into, now you could use confluence of fibs, etc., into certain pricing, premium and discount. And then if price is distributing, you have your own strategy for that potentially. Okay. And we're going to talk all about this, how it kind of relates to OBs here in a second, and the alerts that come out. So this kind of is an example of like what this means for your OBs. Okay. So consolidation phase, I trade with the edges. Okay. I talked about that in the last mitigation video that I did in the group. It's very similar to distribution. And if you know where you are in the consolidation, there's some very, very high RR win trades, guys. understanding liquidity and understanding how the sessions inside of consolidation will take out liquidity and then go to the high, and then it will take out liquidity, and it'll go to the low. And there's some very valuable trade opportunities inside of consolidation. Now, when you start to move into the expansion phase and you get this trending market, this is where you need to know where you are so that you can start to formulate that. If an OB alert comes out, and I'm gonna show some examples here later in these slides, that looks like maybe it's a reversal, well, then you need to understand that you're probably going to get better RR on the lower time frames than you would taking a 50% entry, as Ann talks about in some of her YouTube videos. Because as you can clearly see here, if I was to map these OBs to this side and think that this OB over on the left broke structure, well, then I need to understand that if I'm in an expansion phase, my TP is not way down here. My TP is actually the next lower demand level. And this is going to help you guys understand that, okay, maybe I need to wait for price to come back into demand so I can take a 50% entry on this OB with trend, okay? And that's how you guys will start to get better RR. And there's perfectly valid trades to take on the reversals. And maybe they're only 1 to 2 or 1 to 3. And those are successful trades, you guys. You don't have to, not everyone has to take these 1 to 20 yard trades on the lower time frames. There's absolutely ways to make money on 1 to 3. Like you have a couple pairs a day that you get 1 to 3 or 1 to 4. Well, that's 8R over the day. So don't be allured by, you know, people posting, oh, I got 1 to 15 or I got 1 to 16. Everyone's trading plan is different, and the market phases, in my opinion, should dictate your strategy depending on your comfortability-ness of your, you know, do you like 50%? Is that the simple way you like to trade? Are you a sniper? Do you like to go to lower time frames like 1 minute like myself? Or maybe you want to go to the 15-minute and that's a little slower for you. So we're going to talk a bit more about this, okay? So with this knowledge here now too, we're going to talk about what do you do, okay, once an OB gets alerted. Now, this is the dissecting of an OB part. Now, there's a lot of videos, guys, in my space that talk about this, but today I'm going to go a little deeper in, I think, giving you the why. I've talked about how I do it, and I'm going to show you why I do it this way. And I'm hopeful. I'm hopeful that the light bulb is going to go on, and this is going to be a bit of an aha moment for you guys. And I really, truly believe that this can help impact your guys' win rate. Okay, so what are we talking about dissecting OBs? Well, there's important patterns, and Marcus touched on this a bit, guys, in his slideshow, and I'm going to talk a little deeper now into the importance of this. So when you guys scale into higher time frames, specifically, let's say the 4 hour is going to be our higher time frame OB. It's important to identify the areas in which price needs to or might mitigate and then reverse from. Okay. Now, for people that are trading 50% of the OB, this is where sometimes there's not a clear understanding of like, why did one OB work and why did it not? And why did I get wicked out and then it came back? This, in my opinion, is the why. Okay. So when you're inside of a 4 hour OB, you can start to look for a 1 minute to 15-minute lower time frame pattern. Okay. Now, 15-minute patterns are more important than a 1 minute pattern. Okay. That is just a fact. The 1 minute rally-based rallies will not hold the same way a 15-minute rally-based rally is. And I'll explain the importance of these things, okay? So the patterns we're going to be looking for in these next examples in these slides is going to be a rally-based rally, a drop-based drop, which is just the inverse of a rally-based rally. And we're going to be looking for, does the OB have imbalance, okay? And these are all examples here of what that looks like. Now, imbalance specifically, we're going to get into is, you know, you have a pullback here in this wick, and this was the last wick that formed from the up. So this area here was a massive impulse that just went straight up, and price never came back to mitigate. And I talk about mitigation in my liquidity video. I believe Marcus talks about it as well in his slideshow. So understanding why price in the Forex market needs to mitigate something is important, because the Forex markets like to move efficiently, but you have to understand, and there's a caveat in the next slide I'm going to talk about, is that imbalance does not have to fill immediately. Okay, so if price makes imbalance, it's not like instantly it's going to come fill it. But these are areas of interest for the next OB potentially, because when you have these V-shaped reactions off a zone that took liquidity, this is a massive amount of volume that's entered the market, and it will create an order block, and it will create typically imbalance. Now, there's patterns we're going to be talking about here, guys, about buy to sell that will show you guys how you can actually start redefining these OBs. But when we're talking about imbalance, you can clearly see here, this was a 15-minute view of a 4-hour imbalance or order block that created from this wick here to this mitigation to this. This is the same example here, okay? So this imbalance here is the same example here. And it's really important for you guys to start practicing and honing your eyes to these things, because there's going to be a lot of examples here where I'm going to show you how they're important. With imbalance too, this is why sometimes I think people ask the question, sometimes my OB doesn't get hit, but price took off and it went in the direction I was hoping for, but I missed this trade. Well, this is the importance of inducement, which I'm not going to talk about today. I have a lot of videos on this, but I will do more for the group. But when you start to have inducement and you have imbalance, well, sometimes I say to the group, once inducement is taken and an imbalance is filled, that's all the market needs to do. It doesn't have to go up to the extreme OB in this case. So you had a 2-hour OB, but market only wanted to fill the imbalance and take out the inducement, and then it took off. So looking into some of this stuff might help you understand the why. Now, I'm not saying please go out and trade every imbalance. What I'm saying here is that if you have a strategy that is only taking the OB alerts or OB trades and you miss one, it's important to maybe look back on the charts and say, that makes sense why I missed it. There was imbalance there. It didn't need to mitigate higher. Cool, I'm okay with missing that trade. Or you start back testing and maybe you redefine your trading plan and you say, well, I'm interested in actually trading inducement or the imbalance fill. That's entirely up to you guys. Okay, this is just one example out of millions that we could show of imbalance fills as trading opportunities. Okay, the next big patterns, you guys, that I deem really important with OBs is the rally-based rally and the drop-based drops. Okay, this pattern is important as a continuation pattern. Typically, when you see this, especially in like the daily or the 4-hour, and you see a rally-based rally, you actually could consider the next 4 hours will probably be it will probably be a continuation. And you can actually now start formulating OB pullbacks inside of the previous 4-hour or daily candle as continuations. And I don't touch base exactly on that trading approach in this session, but rally-based rallies are continuation patterns, as well as they are areas, you guys, and we're going to go through some charts here to prove it, but they are areas where typically a rally-based rally or a drop-based drop is formulated, because this is where the interaction between buyers and sellers on a demand or supply level has formed. And now you have this fight, if you will, for like layman's terms, a fight between what's going to hold and what's not going to hold. And as we know as traders, that if demand is holding, you are in an uptrend. If supply is holding, you're in a downtrend. And so when demand starts failing, you're going to get a rally base or you're going to get a drop base drop, and you're going to see sellers take over the market. But these patterns now start to formulate in your minds of why would price reverse from these? Well, they're going to reverse from these because you have a ton of orders have come into the market. There's a struggle for power on who's actually going to win. Is demand going to hold or supply going to hold? Which then leaves, if one or the other takes over, which obviously it would in order for the pattern to form, you're going to have leftover orders there. And this is where price is going to start to come back into these OBs or these areas of interest, POIs, like Marcus talks about, and actually you can get trades off these. Okay, so let's go into a couple examples. One, we're going to go into an imbalance fill as an order block alert. So this was an order block that was sent out, I think, a couple weeks ago. There's tons of examples. If people have, I can do other videos in the group, guys, and show this. But in this example here, the green area is your 4-hour OB. Price started making some lower lows, lower highs, lower lows, and then all of a sudden the imbalance was filled. And what happened? We got a chalk. Okay, now the difference between a chalk and a boss, you guys, is a chalk takes liquidity from both sides. Okay, it took out the low, it took out the high. We have a retest into the chalk, and there's our trade. Okay. Now, if you're concerned or you're confused where price might have reversed from, well, adding the confluence of this OB actually had imbalance. So I'm going to wait for the imbalance to be filled. And if I then get imbalance filled and I get my rules in terms of a lower time frame. Now, this lower time frame right here that you're seeing is a 1 minute. Okay. I understand not everyone trades 1 minute. These things are fractal. So they're up here in this area here. I don't know if you guys can see my cursor. That would have probably formulated a 5 minute chalk. Okay, so there's confluence to the fractal nature of the market. And so this is a confluence that I use every single day when an OB gets hit. Does it have imbalance or does it have a rally-based rally? And do we have areas that price will probably want to reverse from? Okay, so next slide is an example of a rally-based rally inside of a 4-hour OB. And again, the importance, you guys, of the 4-hour or the rally-based rallies is that a rally-based rally should break structure. It should be responsible for taking out a previous high in this case. So this rally-based rally, it stopped here, okay? The wick formed, we got a rally-based rally, and we're responsible for the break of structure here, okay? So inside of this 4-hour OB, I can be interested in potentially this lower one, even though it wasn't really necessarily responsible for the break of structure of the previous high, okay? But this one was. Now, this rally-based rally, again, it was responsible for the break of structure of this high up here. And this is where you guys could start to formulate continuation trades off of, as it is a valid area. And we can talk about this later. Now, if you look at this example here, this rally-based rally, we're going to extend all the way. Now, you consider what we're looking at here. We are looking at the left side of the OB that formed. I'm now extending this green box all the way to the right for the retest. So this would have been like an alert that got sent out, and you would have then gone to the left and say, okay, do we have a rally-based rally inside the OB, or do we have imbalance? What do we have inside of this OB that tells me a confluence that I could actually take a trade from potentially, okay? So now if we actually go all the way to the right, we get the alert from Ann, and we have this green area on the 1 minute that is the rally-based rally. And what do we get? We end up getting a 1 minute chalk, a retest, boom, price takes off. That would be your confluence trade, okay? Let's go through another example of, this is the 5 minute, you guys. So this is a 4-hour OB. We end up getting a chalk. We end up getting a pullback into the low. If you want to wait for now your break of structure confluence that Ann talks about, you now have a break of structure. And this is the difference, you guys. A break of structure does not take out the low. And you can see each one of these breaks of structures are not taking out a low. The chalk took out the supply, okay? And then it broke supply. Sorry, it took out demand and broke supply. This is a chalk. This is a boss, okay? And what you can start to look for is rally-based rallies on the bosses. Now, this one here, price, it did make 2. Price decided to come to the extreme one, and that is valid. That can happen. But you can see how many trading opportunities potentially you had by waiting for a break of structure. A rally-based rally, again, remember, is formed when buyer and sellers are fighting for control. Because if price was going to go lower, this supply area should hold. That's why sellers come into the market. They drive it down. Buyers take over. They drive it up. You get a rally-based rally. Price comes back in. It wants to mitigate these leftover orders, and it continues higher. Okay. Each one of these rally-based rallies, you also have an extreme one down here. Each one of these rally-based rallies are formed due to the buyer and seller interaction of your supply. Price comes back down, mitigates. Okay, this is your rally-based rally confluence that you can start to use with your continuation patterns, as well as inside of OBs. Okay, let's keep going. Now, the importance of switching timeframes, you guys. This is, in my opinion, extremely important. What we're going to be talking about here is buy to sell candle patterns. Okay. This pattern here is a 4-hour sell to buy. Okay, we understand. We go up, we go down, we have a wick, and then it goes up. Okay, This is a sell to buy candle formation that took out supply. That is what it looks like on the higher time frame. However, when you scale into the lower time frames, you get rally-based rally and consolidation patterns that were responsible for breaks of structure. These are important areas that you guys can add as confluence, and in some cases will actually reverse price prior to filling an OB lower. Now, I'm sorry I cut this picture off, but this down candle here was a 4-hour OB. So price only really wanted to touch the top because if we look here, what did price do? Price created your lower time frame rally-based rally, 4-hour OB all the way here. Boom, price comes up, taps it. Huge trade. This is a 4-hour trade. So this would have been 200-300 pips. So when you go into this zone and you actually dissect your 10-minute rally-based rallies, this is where you guys could start to add confluence of, do I have a rally-based rally that was responsible for the previous supply break? If so, that's a great confluence now to either add a pending, and you obviously want to, like in this case here, you want to add obviously some area for mitigation lower. But these are the valid areas to now look for, not necessarily the entire OB. This is why I always say, and I have tons of videos on this, every single OB, whether or not it's an alert that Ann sends out or that I formulate for myself, I will scale in and I will go to the 15-minute first, and I will see whether or not we have a rally-based rally or imbalance. Then if we do, I'm interested in that potential trade, and I'm interested in those areas only, okay? So let's look at all of this in combined and putting the pieces together and to go through some alerts that Ann sent out last week, okay? So this is USD CAD 4-hour Jan 13th alert, okay? This was a buy order block, all right? So let's just open up trading view, and we're gonna go to this alert, okay? So let's turn off this. Let's put this in replay mode for a second. We're gonna go all the way back, and we're going to go to the, sorry, one sec, I'm just gonna go back here. We're gonna go to the 15-minute. Okay, and again, too, actually, before we do that, I want to show you guys something. What do we have at the top of this OB? Okay, we have our sell to buy candle that was responsible for your BOS. Okay, you also have a continuation trade here, guys, off your rally-based rally that went higher. Okay, but this is your rally-based rally on the lower time frame, or your sell to buy candle that was responsible for your break of structure. Okay, so I instantly, now my head says, I'm interested in this zone. Yes, we probably have imbalance below. And this is where you guys have to understand from a psychology level, and we'll talk about this, is you need to backtest this and you need to understand the win rate of doing this. Okay, so if we go to the 15-minute, what do we have? Now, again, this is the what I talked about in the last slide, switching timeframes. This to you guys might not look like a rally-based rally because it has 2 candles in it, but by going to different timeframes, it starts to, what are we on, 15-minute? Different timeframes will give you, will give you different patterns. So the 15-minute, by knowing that there's 2 candles in there, well, if we consolidate the 2 candles into one, that means the 30-minute has a rally-based rally, okay? So it is important for you guys to start understanding how candles look in different time frames, and you only get this knowledge by chart time, like Ann says. You need to be in the charts, you need to be back testing, you need to be taking screenshots of these things so that it now is ingrained in your guys' mind, okay? So if we go now to the chart and we just say, okay, I'm interested in this zone, and let's actually just like put this all the way to the right. Okay, and then we could say, okay, well, I'm potentially interested in this zone. So those are the only 2 areas that I'm interested in for my my trading in this OB. Okay, so now let's go. Yes. And what do we end up having now? Price comes back in. This is the 30-second chart. So again, if you like, or sorry, this is the 30-minute chart. So the nature of the market, you guys, is fractal. So I don't care what time frame you trade. Patience is a virtue, because I guarantee you, if this happened and price took off like this, you guys are thinking, oh, I missed the trade. Okay. But what do we have? I'm going to go into the lower time frame for everyone here too. But what do we have too? We have our chalk. Okay, we have our chalk. And then with the knowledge I have, you guys, of these three candles, this V-shaped structure, this entire area, okay, this entire area is probably a 1 hour OB, even maybe a 2 hour OB. Oh, where to go? Okay, because when you have those V-shaped structures, oh, I went to the 2 minute. That's why I was confused. When you have those V-shaped structures, you have imbalance and you have an order block formed. So we have a chalk on the 30-minute. Price is moving away from us. We're not going to panic. And depending on how you guys like to trade, if you want to take the higher time frame, in this case here, you could look for your OB. You could put it at 75% of the candle. And then again, you can take your trade and target supply zones. So this would be a really nice, almost 1 to 4 RR trade. Did it get to one? Very close. And to me, that's very successful. Now, if you want to hold this trade longer, you absolutely can. And we're going to talk a bit about POIs like Marcus talked about, but always taking a trade, you guys, to the next supply and demand zones is extremely, extremely important. Okay. So with that being said, we need to stop having FOMO, or fear of missing out, because the Forex markets like to mitigate imbalance. Okay. And it likes to come back to retest, because price just will not just take off to the moon. Now, in some cases, it will come to this area here, right? If there's a rally-based rally, and it might continue now making rally-based rallies, and that's fine. If you put your order at the extreme and it didn't trigger, you can get back in the trade with the knowledge that we're making breaks of structure. We might have formed a rally-based rally. All of a sudden, we have another break of structure. Cool. I'm going to wait for this rally-based rally to take higher. Okay, so that's what you guys can start to do. Now let's look at this a little lower. So in this case, we had that 30-minute chalk, right? But what do we also have? We came into that rally-based rally, and we had our 1-minute chalk. Okay, so again, you can be looking for taking your trade off the extreme. Sometimes the trade will come and it'll actually bounce off this rally-based rally here, which is called the flip, and it'll take off, and that's perfectly valid. So you guys have to back test. Are you going to take both trades on the lower time frame, or are you just going to take the extreme? In this case, depending on the pips, this is USD CAD. So again, around a 2.5 pip stop loss is valid. Make sure you cover the wicks. So depending on your guys' broker spread, and then there would have been your order block trade. And now this is the interesting thing, as you can clearly see, you guys. If you waited for the 30-minute chalk, you got a 1 to 4. That's a really nice trade, right? That time frame, and we're going to talk about a bit about this in the next slide, but you can't just expect that because you trade the 30-minute or the 15-minute or the 5-minute, you're going to get a 1 to 20. That's not always the case. If you're with trend, that absolutely can happen. But the big trade moves typically happen on the 1 minute, because look at this is a 1 to 16R trade, and this actually formulated the 30-minute chalk. So we're already in and out of the market before someone on the 30 minutes even looked at potentially entering a trade. Okay, and that is the difference between how you guys trade. It's up to your personalities. It's up to your own confluences. Everyone trades different. This is how I trade, because I like to get in and out of the market. And in this case here, this trade ran 40 minutes and there's 16R. I don't have to wait 3 hours for a 1 to 4 or 1 to 5 or etc. Okay, and you can see how much this actually ended up running. Okay, so 1 to 30, and it pulled back into a rally-based rally that was formed here. Okay, for the 30-minute chalk. And that could have been a potentially other entry, and you could have looked for maybe another chalk and flip, right? So we could say, yes, we took out a low. Yes, we took out a high. Cool. There's our 1 minute chalk. There's our entry. Okay. And then you could cover the wick. So in this case, that would have been a bit bigger, higher stop loss. That's 5 pips. And that would have been another 1 to 10 RR trade. Okay. We're using confluence with the lower time frames, and we're not trading randomly. Okay. We are trading with confluence, and you now have a rule-based strategy here from a process standpoint. We're going to talk a bit about that later. Okay. So let's go to the next alert. CAD JPY, 4-hour order block on the 12th. Okay. Now, this one's interesting because this one I would consider a reversal OB. Okay. If we remember and we go back to the screenshots here, oops, sorry, guys. If we go back to the screenshots up here, okay, what does this look like? Let's actually go to, yeah, this is fine. If you inverse this, it's basically the exact same. Every time you get a pullback, you guys, when you have the opposite happening, so we're in the declining phase here of market structure, not every single boss that formed a break of structure as you're in the declining phase is going to go back and create a new boss. It's most likely not going to do that. It's actually most likely going to retest supply and keep falling, as you can see here. So when we talk about this OB alert that was sent out, let's go back to TradingView. Okay, what do we have, right? Every single one of these, okay, OBs are valid trades. But what did they do? They only retested demand. They didn't all of a sudden just go to the moon all the way down here. Now, it could have, for sure. But this is where you guys need to understand, where are we at, right? We had a declining phase. We had a accumulation phase. And now we have our expansion phase, which is going to start retesting every single layer of your, if you want to talk about retail mindset, trend line. Okay. Anytime you have a trend line, price will start bouncing off each one of these levels, most likely to come back just to equilibrium and come back into demand to go higher and create your boss. And this is where it's important. Let's say that you're a person who takes 50% entries. Well, then if you took 50% entry and you covered the wick, let's say you didn't get stopped out, well, then you shouldn't be shooting for a 1 to 10 here. That could be your TP2 or TP3, but you should be shooting for the next demand. And that's a really nice, successful 1 to almost 5 RR trade. There's absolutely nothing wrong with that trade. But I think there's a lot of people taking good trades and they're thinking, oh, shoot, I see all these people posting smart money trades at 1 to 14, but they're not doing that. They're not doing 50% of the OB. So we need to be, as traders, realistic about our targets. And this is why I say to everybody, please start looking at taking partials, BE, or take the whole trade off if you want, at where you are in the structural leg and trading to supply and demand. Okay. So if we just now look at this from that perspective, I would then say, okay, cool. If I'm not gonna snipe this, then obviously my TP would be here. And then you can start to formulate, maybe, you guys, you go here and you go, whoops, I did it wrong. Sorry. We go here and we go here and you say, okay, cool. Well, that's going to give me a 1 to 7 RR trade. I'm okay with that. So I'm going to go at 50% of this candle, and that would be your target. It shouldn't be automatically 1 to 10. Okay. Now, what we're going to do is we're going to go back in and we're going to use the confluence system that I just talked to you guys about. So first we're going to go to the 15-minute. We're going to go all the way back. Let's put this in replay mode a bit so it's a little easier. And what are we going to look for? We're going to look for a rally-based rally. Now, the 15-minute doesn't have one. It does have an OB, but what do we have? We have a buy to sell candle. That is a rally-based rally. So I'm just going to cycle through some time frames. I'm going to go to the 10-minute. I'm going to say, okay, we don't have a rally-based rally. I'm going to go to the 8-minute. Okay, cool. So not only do we have an order block that broke, we also have a really nice rally-based rally that was responsible for the break of structure. Cool. I'm now going to mark this zone as the area I'm going to wait for. Okay. And we're going to go back to here. And what happened? Well, that is where price tapped into, and that is where price reversed for the next days. Oh, sorry. Yes, I apologize. Yes, drop base drop. Sorry. Yes, thank you. That was a drop base drop. Apologies. Sometimes I do that when I'm talking about rally-based rallies for so long. But yes, let's go back there just so people aren't confused. Thank you for in the chat for fixing that for me. This is a drop-based drop. Okay, drop base drop. Thank you for the people in the chat that caught that. And what does price do? Price falls from there. Now, what can you guys do as traders? I think am I on replay mode again? Oh no, here we go. What can you guys do as traders? Well, depending on how you are, again, Anne talks about taking, does price come back every time? We'll talk about some of these after. Thank you for that question. Anne talks about, guys, 50% of the entries. Now, what's interesting about this trade is this rally-based rally actually coincided very, very close to 50%. So if you would have taken 50% and you cover the top, this would have been a very successful OB alert. I don't trade that way, but that would have actually worked out very, very nicely. But if you want added confidence, you guys, you can now start to look for trades. Now, what do we have here? Okay, this is where you guys have to understand the markets and closing and not closing and supply and demand. So we're going to go to a 1 minute because there is a 1 minute trade on here, but there's also a 15-minute, this is an 8 minute. So let's 8 minutes, a weird time frame. I don't think anyone trades 8 minutes. So I'm going to go 5 minute because I know there's a lot of people in the group to trade 5 minute. Okay. So what do we have? Okay. We have a liquidity. Oh, guys, there's no short key on TradingView. You literally can just type any number on your keyboard and it will do that. Like if you type in 15 minute, it literally just does it. So yeah. What do we have here? We have a chalk, right? We have, we took liquidity. And then again, it's important to understand what is a rally-based rally? That is demand. So when we take and make a higher high, that should hold. That should do this. Well, it didn't, right? It didn't. So demand is failing. It actually took liquidity and took out the low. So this now is your formulated entry zone. Oops, sorry. This is your formulated entry zone. Okay. We have our confluence, we have our 4-hour B, we have our rejection off our drop-based drop, we have our break of structure with the demand that should have held because this demand was responsible for a boss. It failed to hold. That means price is going to go lower most likely. We don't know though that it's just going to tank like this. It could have just gone to here and taken you out. This is where we're going to have some losses. What I'm teaching you guys here is not 100% guaranteed. Okay. But this is added confluence to every one of your guys' trades. And now you can actually formulate an idea where you take your trade, you maybe want to cover the high. And that now is a really nice 1 to 4. You could have gone break even. And then you can start to go back into the higher time frame and look for where your demand zones are, right? So in this case here, you could have gone break even at this demand because you don't know that price isn't going to go and do this. And so if price keeps going lower, cool, I'm break even, I'm satisfied with that trade. Maybe I want to partial at 1 to 5 at this demand? Do I want to take all my trade out with this demand? Do I want to take out this demand? And you can see how each one of these demands areas was responsible for some sort of pullback. And we as traders don't know that this pullback isn't going to just keep going and doing that. That's why I say it's very important for you guys to learn where the POIs are so that you can actually be successful, because a 1 to 5 is a great trade. Obviously, we all want to hit these 1 to 10s, but we do not know that they're going to do that. Okay. So in this case here, that's the 15-minute trade. And if we go to the 1 minute quickly, I'll show you a different example. Okay. And this is where it can be interesting and I will do a video on this, guys. This is called a flip zone trade. Okay, price tapped into here, price made a drop-based drop. I would have been interested for a trade here. Okay, price never came there, as you can see. But what do we start to have? When we talk about, if you want to go back into retail mindset, you have supply and demand, right? And retail traders are taught that, you know, if you have a break of your support, so we're going to make this a different color. Let's make it red. So if this is your demand and it should hold, and we have a break, and then we have a flip, okay, this is now acting as your flip area. But what do we have? We have a break of structure with a chalk. Okay, and this could have been your continuation area. You could have gone for the high and just nicked it. You could have gone for, this would have formulated an OB on the 2-minute. It really depends. This is where you guys got to cycle through timeframes, but you can see that this would have been a valid continuation zone because now our demand turned resistance and price is actually moving away with confluence from these areas. And for people on the 5-minute, the same thing is true. You start to see you took liquidity to the downside, you have your 5-minute chalk, and this would have been a valid entry if you missed the extreme. Okay, and I have tons of videos on this, guys, and I'll do more for the group. Okay, let's go one last example, and then we're going to talk about, I know this might go a little over an hour, so I apologize if people are on a timeline. This will be recorded and you can finish it. I do want to go, maybe I'll just say, do people want to see this last example, or do you guys want me to carry on with the rest of the session? Because I want to respect people's time. Okay. All right. GBP JPY, January 14th. All right. So we have a buy order block. All right. GBP JPY. All right. So what are we going to start to notice, guys? I want you guys to get in the habit here of looking at the candlesticks. All right. So first things first, based on this, I do see some imbalance, right? From this to here. So I'm just going to make this a trend line so you guys can see that a little clearer. Okay. So we do have a little bit of imbalance. That's interesting. What do we also have? We have our sell to buy candle here that was responsible for the break of structure. Okay, cool. So I'm really interested in that. It's great that we have imbalance, which means most likely price will fill it and have a reaction. And we also have a nice lower time frame rally-based rally in this case. Okay, so let's go over to the 15-minute and let's see if that makes sense. Okay. So in this case here, this was your imbalance. Let's go to a different time frame. I want to make sure it's clear for people. Okay, so 30-minute. Okay, so now we have our rally-based rally that was responsible for this break, right? All of this is consolidation. Boom, we get buyer-seller interaction here. It was responsible for this break. So I'm going to now say I'm interested in this area. This is why, guys, it is important to cycle timeframes. But if you look at like the lower timeframes, you can clearly see that we do have consolidation and we have interaction between buyers and sellers here that was responsible for this break, and there's liquidity up here. So this is somewhere that you guys should be formulating that these are the important areas of OBs. I think people have asked me so many times, what inside of OB is important for me to look at? This is what I'm telling you, like 100% imbalance and these areas of buyer-seller interaction. Okay. Yes, you should have TV and MT4 beside you. I do that. It's always side by side so that I personally market execute. So when I see price come back into here and give me a 1-minute chalk, I am executing on MT4. This is where it is important, guys, to look at, find your broker like Owanda or FXCM or something that's close to whatever broker you guys are on, And if you have MT4 and TradingView side by side, you'll see if they're close. All right. Are you seeing the same candles? If so, that's the broker you should use on TradingView. Okay. All right. So if we go down here. Okay. So price comes back into our zone of interest. Okay. And what do we talk about? When you are making drop-based drops, this is a 2-minute drop-based drop. It is a supply zone that should hold, right? These supply zones have reaction. They should hold. So supply is failing. So what do we have? We have our 1-minute low liquidity taken. So we have, it's chalk, guys, is basically, if you want to think about boss or don't want to add chalk, it's up to you. Chalk is literally a boss in both directions. Okay. I call it a chalk because it's not, for instance, if this impulse did not take out this high and instead consolidated here and then started doing something like this, I wouldn't take the trade. I want to see it take both sides out, because this to me is a reversal pattern. It's saying I filled what I wanted to do, and now I'm interested in mitigating somewhere up here. And this is why taking supply and demand is important, because this could have just gone here and then come down here, and that's fine. I totally understand it could. And this is where either you set up your break-even targets, or you're actually exiting the trade and paying yourself. Okay. So in this case here, price could have come to the flip. It didn't. It actually broke right through. So now I'm interested in this. I'm interested in the extreme. You can set up your trade like this, and then right to this supply zone that could reverse price. It's already a 1 to 7. So do we need to get greedy? No. And you can see how much price really did not want to go higher there. So in this case here, this was a valid area to take your trade from. We don't know that this is going to happen. We don't know that price all of a sudden is going to rocket way up here, and this small move ends up giving you 1 to 15. We don't know that. And that's why it's very important, you guys, to don't get greedy, pay yourself at supply and demand, because in fact, this gave you a reversal chalk, and people could be, there's a video I'm going to be coming out with the group about hedging and how that works. Okay. But you can see here, we had our rules met. We had our rally-based rally inside of the 4-hour OB. We had our lower time frame chalk. We took our trade. That's the rules. Very, very simple. And you can clearly see that I only needed, this is 3 alerts in the same week. You really only need 1 to 10, 1 to 8, once or twice a week to be very, very profitable, you guys. So there's no need to overtrade. Just be patient. If this OB didn't give me the chalk or didn't give me my setup, don't take it. Don't take it. Okay, so that's the example on the lower time frame. All right. Now, if we were to look quickly at the 15-minute, I haven't looked at the 15 minutes. So let's see. So in this case here, I personally wouldn't have entered on the 15-minute right here, because on the 15-minute, demand is holding. It finally broke. This would be a 30-minute rally-based rally. So for me, I'd be waiting for price to come in here. So on the 15-minute, guys, this is where there was already a 1 to 16 trade on the 1-minute, but the 15-minute, I wouldn't even have entered yet, because the supply is holding. So we have no idea that price wouldn't want to mitigate further into this OB. Okay. So with all that being said, I hope those examples were helpful. Please go back test what I just talked about, because I'm pretty sure you'll find it in almost every alert that Ann sends out. And let's go through now reversal OBs and TP zones. This, I kind of highlighted this. I know some of you guys are asking questions. I'll cover some of those in a bit here. I covered a bit about this, but basically the whole idea of this, guys, from a psychology level is just understanding. I want you guys to be profitable. I want you to be positive with your trading. And I think there's some people in the group that take really nice trades, but they hold them too long, and then their psychology gets hit because it says, well, my win rate's so low. It just doesn't make sense that I'm losing, yet, you know, Ann's taking these 1 to 10 hour trades. And I think there's things inherently that Ann and myself and Marcus and people that have chart time we just know we've seen the chart so many times that we sometimes just associate what's happening on the chart, and it's just inherent. It's just easy for us to do. And there's other times where I think people are taking 1 to 4, 1 to 5 hour trades, and they're not taking profit. And that is exactly kind of this example. So, and it goes back to these examples here, guys, that I mentioned, right? Like this stuff here. Okay, this is 4-hour OBs that, you know, obviously did not give you the RR. And this is where trading with trend versus reversals is important. So in this case here, you have, I think this was a 2-hour time frame. You ended up having an OB that broke structure. Well, your target should be the demand. And in this case, demand held, and then it broke structure. So you could have bought off the OB here that broke structure with trend, right? And so this is where you guys need to understand where you are in the markets from the market phase perspective. Are we trending? Are we expanding out of a accumulative, a consolidation zone, or a distribution zone? Or are we ranging? And do I need to take trades to the edges and then just get in and out? Okay. Here's another example, 4-hour drop-based drop OB that broke structure. Well, price here did break structure on the 4-hour. So you could be taking, if you're, again, I'm talking about most people that are doing 50%, you guys. So if you're taking a 50% OB, this OB would have given you like a 1 to 3, but this OB with trend would have given you probably a 1 to 10 using the same strategy. And this is where it's important to understand, again, where you are. Again, another example, 4-hour OB with supply that broke structure. So that would have been probably a signal that came out, and I'll show some examples. Well, your target shouldn't be 1 to 10. It should be the demand. And in this case here, that would have been a really nice 1 to 3.5 RR trade. And then price ended up going higher. If it ended up, if price came here, you guys, and then kept falling, then you can actually keep holding that trade after maybe going break even. But in this case here, you need to learn where your POIs and your targets are for being successful. Because let's say you took 2 of these trades or 3 of these trades in a single day because there was 3 alerts that came out. Well, 1 to 3.5 with 3 of those trades is 1 to 10, right? You don't need to get 1 to 10 on a single trade all the time to be very, very profitable. Okay. And here's some just examples, you guys, to keep in mind. The alert that gets sent out here for the NZD-JPY, this one down here, this was a continuation of your accumulation phase. So this was a valid, really nice buy. But see how Anne has these other sell order blocks up here? Those to me would be classified as reversal OBs because it's like this. If as price is starting to make higher highs, yes, you are in a downtrend, but those trades probably will trade back into demand. So if you're using a 50% trading strategy off the OB, then be realistic with your targets. If you're trading the 1 minute like myself, that probably will give me a 1 to 10 or 1 to 15, because this is a 4-hour potential retracement, which could be 40, 50, 60 pips. Okay. And this is where it's just very important to understand how you trade, how these alerts are getting sent out. I wanted to talk a bit about this because I think there's people taking really, really nice trades. They're just holding them potentially too long because they don't know where they are in the market phase perspective. Okay. And again, here's an example. These could have been alerts that got sent out, and each one of these cells actually are only touching demand. Okay. Can you define the exact candle for supply and demand? So in these cases here, guys, supply and demand is held by 2 areas. You have your flip zones, okay, which is the top or the extreme, right? So in this case here, you can see this trade came down to the flip zone, which also had a rally-based rally, right? You can see that. And then it went higher, but then it mitigated lower to the extreme, and that can happen. And then it went higher. This one came down to the drop-based drop, or it might have just missed the rally-based rally there, but then it came back. So there's always a flip, and there is an extreme. Okay, and I can, if you guys really want more detail about this, I can do other videos for the group. But you should be looking for the areas that take off and have impulses as your low legs. Okay, those are your demand areas. Okay, I hope that answered it. And if it didn't answer it, I will do another video and just show. Where are my other videos? They're all in my teaching space, you guys. I'm not sure. it seems like maybe some people are missing, but in the coaching program, Kyle's teaching, I have tons of videos talking about how to read market structure, lower time frame, breakdowns of tons of alerts. I have a lot of videos, you guys. So if you don't see this in your space, just reach out to Anne and she'll take a peek. You might have to log out and log back in. I know there was a bug, I think, with Circle that for some reason wasn't showing it. So please log out or log back in. There's tons of videos. And same, if you're not seeing Marcus's stuff, guys, he's got some great content here. So make sure you're checking that stuff out. Okay, so the last part, we've got 3 slides left, and then I'll give you guys your day back. We're going to talk about psychology. Okay, so I think there's some people, I've had some conversations with people, and they don't have their circle or their alerts set up to the point where they're getting everything, right? They're getting like 28 alerts. They wake up and all of a sudden they look at their email, they look at their phone, and there's like 15 alerts that got sent out. From a psychological perspective, you guys, what do you think that's happening to you? Guaranteed, most of you now have anxiety and you're thinking to yourself, oh man, I'm missing out, right? You're like, I got to get in the markets. I got to go look for a trade. That is a horrible way to start your day, because you should enter the markets calm, relaxed, with your strategy in mind and clear-headed so that you can objectively look at and not impose your will on the markets. You should never be looking at the markets saying, I'm taking a sell today. Even if there's a sell alert, you need to step back, look at the charts and say, does this sell alert make sense with where the market is? What phase am I in terms of this Forex pair? Is this going to be a 1 to 10 hour trade? Am I going to snipe this trade? Am I going to just do 50% on this OB? All these questions should be asked of yourself and going back to your trading plan prior to ever putting a trade in your charts. And I would suggest for a lot of you is remove the OB alerts that don't maybe coincide with the time frame that you guys trade, right? And we're going to talk a bit about this. And I would say maybe you only nailed the alerts down to 3 or 4 pairs for a bit, right? Start to understand that, yeah, like Anne's saying, she sends a lot of alerts because there's different members in time zones. And I actually talk about this in the next slide. Let's go to the next slide. Is actually, no, it's in the next slide. But everyone has different time zones. So there's a lot of alerts that come out that there's like straight up, like I'm not even taking because I'm sleeping. And so why would I want to get those alerts, right? I'm just going to ignore all that stuff. And we're just going to trade when we are at the charts. All right. So if all of a sudden, yeah, if you're getting all these alerts, guys, please start filtering them out so that, you know, maybe you're getting 3 or 4 a day max. And ideally, you're getting 3 or 4 a week, because I just showed you 3 alerts that would have gotten you easily 30 to 40 R, and that would have been your week done. So there's no need to be trading 20, 30, 40 times a week. I'm telling you, if you practice all of this stuff, you guys will be very, very profitable. Now, when we talk about psychology of trading, a lot of people don't have data to back up their feelings. And what do I mean by that? Let's say that you take 3 or 4 losses in a row and you start panicking. And maybe you're new to trading, or maybe you don't quite have a hold of your psychology and you start revenge trading because you believe that the markets owe you something, right? This is not a good place to be. And I think for a lot of you, you will avoid these feelings if you actually go and do the work to sit down and backtest your strategy, because every strategy will have a max drawdown, just like a funded account. It will have a max drawdown, which is how many trades in a row would your potential strategy give you that are losses, and how many trades in a row might you win. So let's say all of a sudden you go and you take 100 trades and with the strategy that you like, and you realize that there was actually a point in time for a month where you lost 8 in a row. If you didn't have that data, do you think that you would actually not be psychologically in a bad state if all of a sudden you're on that 8th loss in a row? And do you think you'll probably give up, or do you think you'd probably start revenge trading? But what you don't know, because you haven't backtested, is that you'll probably have a win rate now of 5 in a row, And if you would have taken that 9th trade, it'd be a 1 to 10 and it would wipe out most of the losses. I think there's a lot of people that have not done the work to be able to psychologically rely on their trading plan. And they end up just losing trade after trade because they just don't have that data. Okay. So the other question I'm going to ask to the group, and you don't have to answer it, just think for yourself. But how many people here let every single one of their stop losses get hit? But how many of you barely let any of your take profits get hit? I'm pretty sure there's a lot of people that can resonate with this. And there's probably a lot of people that resonate even moving their stop loss. And they're like, oh, I just need to let the trade breathe a bit more. I think it's going to go up. I think it's going to go up. And you're not following your plan. Therefore, that 1R that you might have lost turns into 2R. Well, now your trading plan is in havoc because you haven't figured out that if all of a sudden that 2R loss now is, and then you go and win one and you haven't recovered your loss, your trading plan now doesn't make any sense. So if you don't let your TPs hit, you guys, and I'm not saying, again, set your TPs at like 1 to 50 and then like wait for 1 to 50. You need to be objective about where your actually TPs are. But as soon as you guys start to now do the work and back test and say, okay, cool, I had 3 losses this week, but I had 3 wins. So I'm 50%. And those 3 wins, because they all hit TP, ended up making me 8R on top of the losses. Now you have some quantifiable data to be able to feel good about what might happen the next week. Okay. So here's what I think you guys should start to do. Okay. I would say these are the 6 checklist items to create your trading plan that would allow you guys to become confident and be able to create a reliable trading plan that you guys can get profitable on. So 1, we're going to decide when it makes sense for you to be on the charts. What works best for you for your schedule and your lifestyle? Do you have kids? Do you have work, etc.? Do you only get 1 hour to trade a day? If so, what is that 1 hour? Only backtest during that 1 hour. It doesn't make sense to be backtesting during London session if you're literally never going to be able to trade London session, unless you want to move to get into that time zone. But backtest and what makes sense for your schedule and your lifestyle. 1, maybe go back and check what alerts are sent during that time. What pairs are maybe moving during the time that you actually can be at the charts. Then go back and backtest only during that time. Okay. Then ideally, I'd say to you, get the data from 100 trades. What is your win-loss percentage and what is the best RR? Is it 1 to 3, 1 to 5, 1 to 10? Do all of this stuff. I know it's going to seem like work, but to me, I love backtesting. To me, it's some of the best times that I can have because it actually reinforces the positive nature of my strategy. How I trade, is it actually winning? Is it not winning, etc. Okay. Make sure you write down your rules. So what is your entry criteria in your strategy? What did you need to see in the charts to be able to actually enter? Was it imbalance? Was it liquidity? Was it a lower time frame chalk? Was it a single boss? Ask yourself these questions and define those rules for yourself. And then once you have that trading plan, only take those setups. There is no FOMO. Do not chase the trades. If you miss a trade and you're like, wow, I should have got into that one, it went 1 to 10. I'm pretty sure there'll be another trade tomorrow or the next day or whatever. And the key, I think, for a lot of you guys is once you start getting into a really nice cadence with your trading plans, you guys will start to learn, like myself, that, you know what, you only need 3 or 4 trades max a week, and you can be extremely profitable with what Ann is sending you guys and what Marcus is teaching you and what I'm teaching you. We've given you so much information here, in my opinion, that you can absolutely kill the markets. So that's my last slide. With that, yes, learn when not to trade. Absolutely. Especially with emotions. If you're coming in hot and you had a bad meeting at work, maybe don't trade at the charts because you'll probably be in a bad mindset. So for sure, Marcus, good point. So with that being said, maybe I'll go back and look at some questions that people had. I don't know if anybody, let me look. So someone asked, what is the efficiency of using this strategy? I'm assuming you mean like, or effective, yeah, efficiency. Basically, what's my win rate? So using this, what I just told you guys, it's above 50%. It's above 50% if you're patient and you get these trades, and it's above 50% if you wait for market timing. So something we didn't really touch on in a lot of these trades here, I forgot to mention, I apologize. A lot of these trades, guys, like I talk about USD pairs, CAD JPY, they ended up moving during the New York Open. Okay, so market session timing is important because if an OB goes off for an Asian pair, most likely during Asian session, you're going to probably have consolidation. And then during London or New York, you're going to see that actual volatility move. So don't be trading a ton of crazy chalk and bosses during Asian session, because what I've seen take place on the 1 minute in Asian session, if it's a US or CAD or GBP currency pair, is that you get distribution on the 1 minute and you end up losing. So coincide the market timing with this strategy, and your win rate, in my opinion, will be higher. Okay. Do you wait for price to react in your direction, or you just see it touch and enter? No, 100% I wait. I wait for the chalk every single time. Like I just showed you, go back and watch the breakdown. What I broke down for you guys is literally what I do. Nothing, there's no difference. It's, do I have a rally-based rally? Do I have imbalance? Do I have a chalk? You can wait for the chalk. I do not take reaction like, boom, it touched, enter. I don't do that. In the end, can you briefly tell the difference between chalk, flip zone, and boss again? I'll make a video on that. That's going to be a bit too long of a question. What I might do is, there's a lot of questions here that I might address. Does anybody want to type in one last, two, maybe three last questions in the chat right now so I can quickly address it? I'm going to go through this transcript, guys. There's a lot of chatter, which is good. What are the best pairs to trade for New York? Those are the majors. Okay, so if we go back to the first slide, I think Ann just mentioned this too. New York Hill Zone major pairs typically will move the best during that time. Pre-London. So pre-London, like Frankfurt, like into the late Asian session, you do get volatility. If I'm super busy for the day, that's when I trade, because my time frame right now, like I have the worst time zone. Like London for me is it's actually starts around 2 a.m. Well, about midnight, but the good move typically happens around 2 a.m. for me. And then New York is like starts at 4 a.m. for me. So it's like really horrible. So I've actually been backtesting lately a lot of late Asian kill zone into London session moves. I don't have any quantifiable data yet on that. I'm still backtesting and practicing that area. But London and New York, when I can get up around 5 a.m. my time, that's when I look for trades off of major pairs. And again, guys, I've mentioned this in the group multiple times. I trade mostly Euro USD. It's the friendliest for beginners because it's got typically on average 0.2 pip stop loss. And there's more than enough room to make a lot of money on Euros USD because the average daily range of Euro USD is about 80 pips. So for someone like myself on the lower timeframes, looking for chalks and bosses on the lower timeframes, I only need a 1 to 10, and that's 20 pips. So Euro USD is more than enough for me to make money. What about pairs that straddle time zones? GBP odd. Yeah, GBP odd will work great in New York and London. OB needs to give me chalk. Yes, that would be ideal. Difference between liquidity and boss. Well, it depends. There's the aspects of liquidity from a market session perspective. I have a video on the in the group, guys. If you haven't seen it, go and watch this one, market session liquidity and mitigation. I think that will answer that question. Yes, I need a lot of coffee to trade London, 100%, and then I can't work. So I honestly, it's very rare that I'm up for London. I wish I was in a time zone. I tell people that talk to me that where they live in like London session is like the afternoon and New York is the afternoon from them, and I just say you're so lucky. You answered super fast on my question about trade entry. Maybe I misunderstood. Do you mean you wait for a full 1 minute candle in your direction before you enter? No. If I have a 1 minute chalk, I will take a trade, market execution trade on that 1 minute OB. So the chalk will give me a 1 minute OB, or it will give me a drop based drop or rally based rally in the flip zone. And again, I show that in the mitigation video. I just showed it here. Please rewatch how I enter those trades. If it's still confusing, I can do another video for the group on that. I would like a copy. Yes, PowerPoint guys will be sent to the group. Yeah, move to Egypt or London. 100%. Trust me, I wish. I talked to my wife about that. Why do you say strong versus weak? So the reason I say strong versus weak, because typically if you guys want a bigger move, okay, maybe I can just show it here. This is going to be the reason I say strong versus weak is that if you anticipate Asian session to move and you want a bit more pips, then it's best to have a strong versus weak or trading a JPY pair. So as you can see here, look at Asian session moved 111 pips, okay, on a JPY pair. That makes sense because JPY is an Asian pair, whereas the average ADR of Euro USD is 30, 20, 23, 17. So trading Euro USD during an Asian session doesn't really make sense unless you're on the 1 minute like myself, where a 30 pip move is a 1 to 10. Right? So coinciding these moves with pairs is hugely important based on the session, right? Please make another video on the 1 minute entry. There's there's so many videos on the 1 minute entry, straight up. Lower time frame, how to read that. Only successful pattern you need to be successful. The Euro USD 1 to 30 RR case study has it. All of these tutorials have it. These are all like an hour to 2 hours long. Guys, there's so much content on how I trade the 1 minute entry. What indicator are you using for the sessions? My indicator, I created one. I can share that with the group. There also is one that you guys can look for. It's you can look for Asian Range by 𝐤𝐸𝐿. This one is slightly different, but it puts gray boxes on. And then I did mention in the start of this call, guys, you guys can look for ICT kill zone boxes. Okay, it outlines, and you have to remember what I said in the beginning of this video. Make sure it maps to your time zones. Okay, so all of those are, there's tons of them. There's absolutely tons of them, you guys. Yeah, if you guys haven't watched my videos, like Marcus said, please go watch those first before asking for another video, because I literally have, it's got to be 50 hours, I think, almost now, maybe a little less of content. Like this here alone was 4 hours of content, guys. Breakdowns of 4 alerts and sent out, all these pairs. So please go and watch all those videos if you have more questions on my entry. And I think with that, we'll leave it for now. Appreciate you guys' time. Thank you for joining the call. I hope you found value in this. Yeah, I'm just looking forward to you guys sharing your trades in the group and seeing how profitable you guys get. Cool. Thanks, guys. I'm going to stop now. Thank you. Bye.